T2108 is a very good indicator in TC2000 which can help you avoid drawdowns by finding points where the market is likely to go down, and also it is very useful to find turns in the market or to find bottoms in the market. So let's have a look at T2108 and understand what it is. T2108 is essentially a indicator which comes in packaged in TC2000, and it looks at percentage of stocks which are above their 40-day moving average. PMA stands for price moving average. So it looks for percentage of stocks in the NYSE which are above their 40-day moving average. So if you look at it currently, what you're going to look at it is it's like at 20.87. So 20% of the stocks are above its 40-day moving average. Now, the good thing about this is that because you have a data for many years, right? You have a data going back many years. So you can see that typically whenever the index has come down to around this area of around 20 or below 20, there has been a bounce, right? And it's continuously, this has been the case. Once in a while, it overshoots that 20 zone, and 20 is not exact numbers, it's a zone basically anywhere between 15 to 20, right? And you will see that whenever the index goes to that kind of an extreme level, it tends to bounce back, and when it bounces back, typically you will see along with the bounce in that same period, you're going to see the indexes bounce back. So if you see T2108 bounce back, right, and the indexes were also bouncing back at the same period. So if you see here T2108 went up, and at the same period you would have seen SPY also went up, right? So T2108 can be used for variety of use. Essentially, it's very good at finding bottom kind of situations. So last week T2108 reached a level which was around 17, or like here if you see here it reached a very low level intraday basis, right? And since then it's been, the market hasn't really made much of a move on the downside, and it's bouncing back. And because historically this is the level from which many of the market corrections have had rallies, there's a good chance that this rally which started on Friday might stick around. And for extremely low readings, or like whenever there's a big bearish market, you will see that like during the COVID-19 time, it went all the way to single digit, right? Even in 2008, 2009, if you see, it went to almost single digit, or it went to single digit. And similarly, you'll see. Now, here's the good thing about it. You have a data going back all the way from 87 in this particular index, and you can use that to do your own study and figure out time. So whenever the T2108 is approaching 20 or it is near 20, okay, there is a very good likelihood that the market is going to bounce, and many times the market actually bottoms at that kind of a level. And unless you have a big bearish market, you are not going to get like the readings below 10 or readings below that levels are very, or single digit levels are very uncommon. They happen only during very big bearish market, like they happened during the COVID times, or they happened during 2009 times, or they happened during the 1987 crash. So if you want to improve your market timing, keep this T2108 in front of you and track it. Especially, it's very good to track and find where there is a likelihood of a bounce developing or a bottom developing in the market. T2108, it's in TC2000, it comes in on. So you will find the T2 indicators when you go here under T2, and then T2108 is part of that indicator. So, and there are other T indicator also, but T2108 is the most useful out of all the indicators which are here.